and weekend. We're going to go to a break. We are coming back. We're not going to go to a break. My bad. Phil says we're going straight to continue actually on the conversation on the commodities right now, because we have been talking about gold, we've been talking about PGMs, we've been talking about oil also, although we're seeing a relative stabilization of the oil price, albeit at elevated levels in today's session. And this all really happened following last night's escalation in geopolitical risks over in the Middle East, Iran threatening military action on Israel. For more on the commodities complex, I'm joined by Mabyanine Phiri, market research analyst over at XS.com. So thanks so much for your time. These moves that you've seen in commodities this week, today specifically, do they make sense to you, or are you seeing a bit of an overreaction in some corners?
So look, I mean, we had to analyze it from looking at the index that we had to break it down mathematically and simplify it to the core, so we have a better understanding of and get a better picture of what's really happening in the market. So firstly, the purpose of this index is to measure the performance of the commodities market. The index is made up of commodities in different sectors with various percentage representations. Now, this is where it all gets interesting. Industrial and precious metals, together with the energy sector, make up about 70% of this index, which is tracking the performance of commodities. When we put that together, we see that commodity demand is coming mainly from major economies recovering from the COVID pandemic. So the 11% gain that we have witnessed so far this year is quite disproportionate. And the question of whether investors should continue to bet on it lies on factors like global demand stability and inflationary pressure. That could obviously affect monetary policy coming from the ECB as well as from the Federal Reserve in the US.
Mabyanine, thanks so much. Apologies there for getting your name wrong. You see, some people are talking about the fact, if we zone in on the platinum group metals basket specifically, I've heard a lot of commentary to say that what we have seen in the recent days suggests that perhaps a bottom has been hit in the PGM space, and the only way from here is higher and higher, which is kind of what we're seeing right now. Do you support that view, or do you take it with a pinch of salt?
Look, I support that view, mainly because if we take a look and analyze gold, for instance, as well as copper, and we also have a look at what's happening with the oil price. So on the analysis of gold, I mean, it continues to reach fresh records, underlying its enduring appeal as a safe haven investment amidst ongoing economic uncertainties. There's also geopolitical tensions, inflation concerns, and currency fluctuations amongst the other factors. So this is definitely propelling gold prices to new heights. Investors continue to flock to gold as a store of value, and also seeing it as a hedge, against market volatility, reinforcing its role as a reliable asset in times of a crisis. When we look at the outlook for copper, it also remains optimistic, driven by factors such as increased infrastructure spending, also the transition to renewable energy sources, and growing demand from emerging economies. These trends highlight, obviously, that copper's essential role in various industries, including construction, electronics, and transportation, are quite vital. So that's based on that, I would say I have to agree.
Any particular price targets for some of these metals, and the short term essentially is what I'm looking for?
So I would say that, look, at the end of the day, we really have to look at the fundamentals, and we really have to look at the global demand, right? So there's definitely risks involved, and that would need to analyze. For instance, like we've seen in the last couple of days, that the rate hike the talks of the rate hike that was supposed to be happening in June, with sentiment of about 60% of that happening, is no longer on the table due to some of the clues that the Federal Reserve obviously gave in terms of inflation. So studying the inflation, we've seen that March inflation continued to rise. That's in the US, and this was actually for the third month in a row. that's definitely highlighting that there's quite a lot of inflationary pressure, and this could definitely affect the monetary policy from the Federal Reserve. And if that happens, we could also then see, obviously, the local our local reserve bank also adjusting their monetary policy accordingly to what's happening on a global scale.
Okay. So there's also been quite a lot of commentary regarding gold, right, and the safety play that's at play. But the safety play that's been at play from central banks, just looking at the heightened level of central bank buying of gold for reserve purposes, suggesting that is there something that these central banks all over the world know out there that the rest of us don't? Would you reckon that such concerns are warranted?
I wouldn't say that. Honestly speaking, I think if we look at how the dollar has been performing, the dollar hasn't been on point. It's really very uncertain in terms of what's going to happen in the US. And due to that fact, you always find that investors tend to reallocate, their capital into gold as a safe haven. So looking at that, we can definitely assess that the rise in prices, especially for gold, is coming from that. There is definitely also the larger economies are buying a lot of gold. That's also contributing to that aspect. But I don't think there's anything necessarily that's terrible that we should be very concerned about when we're speaking of the global economy and what's happening with the gold price.